Your opening statement. I appreciate that this session is focused on mostly monetary policy, but I'd actually like to go back and following on from what we were just discussing and Deputy Doherty's point, I'd like to ask a few questions about the Central Bank's regulatory response to the financial crisis. So, during the crisis, as we've just heard, many banks have offered mortgage payment breaks to customers. There's a deal of frustration in terms of the availability of these payment breaks and how interest is and was being calculated during the break period. Similarly, we've had concerns from people who had mortgages refused or offers withdrawn as a result of their employer being on the temporary wage subsidy scheme. And prior to the crisis, there was the tracker mortgage scandal, which, for some is still dragging on. The Central Bank is currently tasked with, amongst other responsibilities, regulating nearly 10,000 firms providing financial services, and with an array of financial regulations to enforce. Consumer protection can sometimes seem quite far down the list of priorities. What is the Governor's view on the establishment, or the re-establishment as it may be, of an independent financial consumer protection agency? Would a standalone agency better advocate for the interests of consumers, ensure redress and better enforce consequences for financial institutions that act in bad faith towards consumers?
Let me say two things in response to your question. Firstly, I don't agree with you that consumer protection is way down our list of I don't know if you said priorities, but from my perspective, and I've written about this in my blog just recently, everything we do ultimately is about protecting consumers. Our founding legislation talked about our focus being promoting the welfare of the people as a whole, and I actually take that extremely seriously. And for me, whether it's monetary policy, and monetary stability, whether it's financial stability, whether it's the mortgage measures, whether it's the restrictions, the rules that we have for banks, and the capital they need to, the buffers they need to sustain, whether it's the moneylender rules that we recently amended. Everything that we do, one way or another, is ultimately about protecting the community's interests. It's about promoting the welfare of the people as a whole. So I don't see the sort of tensions that some people see in terms of our role. I absolutely acknowledge that there are different systems operating in different countries. In my view, actually, it makes quite a lot of sense in Ireland to bring the regulation of the financial system and the protection of consumers together. I think the people who provide the financial service providers are the people that we spend a lot of our time supervising. They're the same people who provide services to consumers. I think creating a separate entity, and as I said, these things exist in other countries, but creating a separate entity, I think, dilutes the potential of our mandate, which is to have a single entity which looks at the whole of what's going on with a financial service provider. So that's my view, but I acknowledge that there are different regimes around the world, but I do want to emphasise that I just do not agree that consumer protection isn't top of our mind. It's actually about everything that we do.
Okay, thank you. Just to pick up on the green bonds issue, I think $5 billion has been raised by the Irish sovereign green bond to date, and I note the framework put in place regarding placement of the funds raised in green projects and the external validation of the fund's green credentials. The question I would have is, why is that the amount that we're raising as a total of the fund? There was an oversubscription from investors on the last raise, and there are any amount of projects from public transport to renewable energy to retrofitting on which the funds could be spent. So what determines how much of the country's borrowing comes through the Irish sovereign green bond?
Thank you. Thank you, Deputy. Yes, correct, 5 billion. We launched the inaugural Green Bond in October 2018, 3 billion, and then tapped it for a further 2 billion a year later, October 2019. In fact, we had only intended to tap for about 1 billion, but the extra demand that you refer to, we tapped for 2 billion. I would just caution, sometimes when you see, if we go back to the vanilla 10-year bond we did recently and demand of 60 billion, you get an element of overbidding because people know that we will scale back some of the orders, and so the genuine demand, it tends to be a little bit lower, so not always when you see a higher level of demand. We're also conscious of the allocations, so we have to allocate against eligible expenditure, as you know, and looking at the quantum of expenditure each calendar year. While there might be lots of projects into the future, we're also conscious that investors are comfortable that we have projects to allocate against, and it looks like the pipeline and the likely pipeline ahead will allow us to do more sovereign green bonds into the future. So it's trying to get that balance between investor demand, the pace of projects as they're starting to be delivered, and then look ahead. So it is something we'll do more of. Hopefully that gives you a little bit of colour.
Thank you.
Thank you, Deputy Harrigan. Deputy